we'll take a good look. I'm still getting signals in here, guys, so sorry about that. We'll take a good look at what's happening in Bitcoin in the markets. Obviously, we have the jobs report come into this, so it's going to be an interesting one for you guys today. And, we're going to love comments, and of course, we'll take some questions toward the end. But anyway, my name is Paul Bear. Welcome back into Tech Path. Let's get into it. I want to thank our sponsor, and that is Ledger. If you're looking at self-custody, which you should be if you're following our channel, this is like the number one thing to do, and that is get into a self-custody zone, and you need to go there. This is the one that I use, I would say, as my number one. I feel like Ledger is still one of the best ones out there. But the Ledger Stacks is getting ready to come out. So go out and pre-order yours now. If you use our link, it does help the channel out. That's the main thing. Check them out. I think there's a big move happening with Ledger in terms of self-custody, so get on it. All right, so let's get into the first story today. And this was a lot of earnings today. What was the earnings and how does it reflect on to what's happening within the Bitcoin market? But in general, around securities. We'll look at some charts here in a minute. We'll show you some good stuff on sentiment, all that good stuff, breaking this down. Here was the first story, which let me zoom in on this a little bit. Crypto trading played a big role in Amazon's web services slowing down in their quarter four. Now, to me, when I saw this headline, I thought, well, is this bad or is this good? The cool thing is that Amazon believes that there's going to be so much growth in the area of crypto that they've started to put other business units behind their development. Obviously, this plays well for the partnership that they did with Avalanche, which is going to be a great opportunity in terms of these one-click launches for protocols. So a big one. A couple of notes here. Amazon beat analyst expectations. Despite the top-level wins, some Amazon business lines, this is what I was talking about, experienced slowdowns, including sales for Amazon Web Services and Amazon's online stores. The revenue growth was 20% in the fourth quarter compared to 27% in the third. And then Amazon shares jumped 7% following the earnings announcement, but are now down 5.6% in pre-market. Amazon stock fell 50% over the course of 2022, while the NASDAQ dropped at around 33%. So the good thing is, if you're looking at Amazon, is the potential here for where this may play into Web3 and especially crypto itself. This was the retail giant's plans and new NFT initiatives. We reported on this last week. This, I think, is going to be a very big component for Amazon this year, but I think 2024 is going to be even more so. But there is some things. This is, of course, I'll highlight this one little section right here. After years of speculation, retail giant is reportedly working now toward a non-fungible token in 2023. Insiders, obviously, on the matter. Amazon's foray into the NFTs could be expected sometime in the spring. This would be interesting because if they do launch and they get this rolling, the opportunity for them from an AWS standpoint and also just from an initiative around Amazon, the retail services, let's not even get into what it might play into in terms of Whole Foods and all those kind of things that they play into. This could really affect a lot of their business lines going forward. So good stuff here. Apple hits 2 billion. This is a problem. 2 billion devices in use, but it's not necessarily a good news scenario, and I'll play this out for you. They had an installed base of over 2 billion active users. Revenues fiscal quarter 2023 down 5% on the year, 117 billion. Apple CEO Tim Cook basically says, hey, we got a challenging environment right now. iPhone revenue would have been flat if were not for currency exchange. So that's a big statement. And then shipments, this is the kind of the killer. Shipments across the industry fell 18% on the year. On 300 million units. So Apple, which gained market share due to the iPhone 14, saw its shipments decline by 15% year over year, 85 million units to 72.3. This is a problem for Apple. And the scenario that plays into it, I feel, is Apple's inability, and I've said this many times, inability to truly innovate into the next generation. Now, could this AR/VR kind of concept of their new headset, glasses, whatever it might be, start to change? I think their position on crypto and metaverse has got to pivot. They are going to get into digital assets, digital collectibles, some sort of NFT integration is going to occur, and Amazon is now beating them to the punch. Google is beating them to the punch. Facebook/Meta beating them to the punch, and their devices are falling in terms of the overall market. So Apple's long-term positives outweigh some of their rare earnings miss. This is a couple of things that they're talking about here that would be good. taking a step back. You see Apple's miss and guide down in the quarter, but they believe long-term positives on tonight's report. I guess the only out I would love to get your feedback. What Apple is doing right now, is there anything that's positive to you outside of maybe the devices when it comes to their silicon chips? Their silicon chips definitely killing, but the iPhones, very staid. They're not innovating in any way. I mean, they're keeping up with the Joneses, kinda. For the most part, Android is killing them. Samsung Galaxies are absolutely, superior, to the devices. And I carry both. I carry the Galaxy and the iPhone. And I use the iPhone because I'm stuck in the ecosystem, and they did a great job on that. Good kudos for them. But I think long-term, next generation smartphone users, we may see a shift here. I know people have talked about it for a long time. Here's a clip right here. As we move through the coming months, quarters, we'll see a return to growth, and the market will begin to discount. And this is basically talking about the big tech earnings from Apple, Amazon, Google, all that good
stuff. Getting around because looking at some of your notes, Stan, and on all three of these, and they all start with despite the blah, 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 we continue to see the company executing. You like all three of these. You're giving a pass, really. Is it just because on all three of these, and they all start with despite the blah, 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 we continue to see the company executing. You like all three of these. You're giving a pass, really. Is it just because they all start with A, or because you've been recommending these stocks? So you don't see any problems with, let's start with Apple, but you say, yeah, there were some issues, but they're continuing to execute. Same story with the other two, but let's start with Apple.
Good morning, Joe. Great to be with you as always. Apple is navigating what is, of course, a very difficult environment quite well, I think, overall. As you know, we've been longtime holders of the name, and what we're seeing is that they're executing on product cycles like iPhone. iPhone was impacted by supply challenges in China over the quarter. But if you look across their businesses, they had a record growth in the installed base, a record size of the installed base. Services remains healthy. I think what's going to happen is that as we move through the coming months and quarters, we'll see a return to growth, and the market will begin to discount that. And so we continue to like the name, even in the face of these macro challenges.
Side of this, I believe that Apple has missed the window here on this particular tech cycle. Now, it's very early. Could they recover? Sure. But the movement in VR, the movement in blockchain, the mass movement in AI seems to have left Apple in a little bit of a precarious situation. And I don't know, I'm going to jump over here to just my tech stocks real quick, and let's take a look at, where is that crap? There it is. So, I mean, this is obviously their bump on that, but if you look at the time frame here with Apple, it's definitely a downtrend right here. And even if you go out on the longer time frame right here, which gets into their, January 22, which was really kind of the big push down. But again, this would have to be a major correction back up to $180 for Apple. Again, what will be the catalyst? Could it be the AR/VR headset that's coming? Maybe. I think this has to be bigger in the ecosystem because remember, the likelihood of the App Store being like it has been for the last decade, I think is over. I think that closed garden is going to change over time. And that's a big scenario that plays out in this. Let me go over here to another tweet. This is Jules Erbach talking about, now this is the good thing. This, of course, is Render CEO. ChatGPT API up next. It's going to feed output right into render graph for things like OLS or SL shaders, script nodes, all this basically in Octane X. What they're talking about here is the ability to render things like AI art, all those kind of things are going to play into this. So Render, again, wins big on the potential of its connection with Apple. That, and I'm not saying that Apple's dead. What I'm getting at is if we're looking at growth vehicles, Apple will still grow. But the usual scenario where Apple dominates, I think that time might be ending. Now, can we see a flip of this? Sure. Apple could flip easily. I mean, if you look at their devices, this is a good example. This is the iPad Pro, supercharged by the M2. And, I don't know if you guys have seen the M1s. I'm a big proponent. I use an M1, and I'm probably going to jump onto the M2 chip here soon. But the point is that really revolutionized, this silicon revolutionized all of this. I want to showcase something to you right here. I'm going to zoom in on this right here. Notice this. right here, that little icon, right? That's render. And this is exactly what the potential of this M2 silicon can be in terms of the ability for render to kind of leap forward. So lots of opportunity here. Again, back to these big tech companies that are starting to figure out there's some Web3 utility that could be in a very unique position. Now, Snap, their shares were plunging on weak revenue because their digital ads are struggling. This is, I think, an ongoing struggle that we've got with Snap and many other social media platforms in general. And the thing about Snap is that even though I do like their CEO, Evan Spiegel, I don't know that he fully has connected into where the vision of what Zuckerberg is doing. And I'm not a Zuckerberg fan, don't get me wrong. But I think he may go down. His legacy may end up truly being metaverse, not Facebook, but metaverse. But anyway, he's basically blasting the metaverse, being Spiegel, Snap CEO. Last thing I want to do is when I get home from work, live inside a computer. But at the same time, they're already kind of doing this. This is a good example right here. Snap launching their new ad campaign, show cost its AR offerings. I mean, it's just kind of talking out both sides of your face. I'm going to mute this, but I want to just play this real quick. This is their ad. Let me kind of blow that up for you guys. This is the kind of scenario that we're going to see, and this is integrating in Snap filters, all of that eventually will tie into, guess what? A metaverse. So I think he is still, either he's playing coy, or he is truly. He's got to know. He's got to know this is going to be something they're going to be doing in a big way. Now, Audius, of course, remember that's their plug-in. We covered this whole scenario on Audius, was why it was flying here recently, and continues. Here's Audius's protocol dashboard. A little bit of the movement since that right there is Snapchat. This is Snapchat. Boom, right there. And then you see this big drop right here. This is just correlation of new stuff hitting. But the good thing is that this is all time. This is the API calls that we'll continue to see. I think, again, as I said, Web 2 integrating into Web 3. And you can kind of see what Audius is doing. Now, others are going to be coming down the road very soon in this area as well. Here, of course, is a good example of some AR Snapchat NFT filters that eventually, again, this is a clone filter. This is the kind of scenario that we're going to see a lot more of this tech moving into social media, and the opportunity for this to eventually become not only a digital asset, a tradable, somewhat interoperable. There's a lot of opportunity here for these Web 2 to kind of leap forward. All of this is kind of the narrative of what we're talking about. Amazon, Apple, Snap, Meta, everybody's getting the picture here now of where this is all going. Google is investing $300 million now in Anthropic, this is a big race to kind of keep up with ChatGPT. This will be AI. And whether we see blockchain integration or potentials there, the point is AI is definitely going to be a major tech that we'll be tracking. When we originally launched TechPath, name show, TechPath, the concept was to try to cover AI, what we were seeing in alternatives, and blockchain. Those were the kind of the core. Blockchain obviously became the strong suit of this channel, but we are a big tech, I think we're a big tech house in the sense of understanding it, where its future is going. And I think we bring something unique. And I think AI is definitely in the race here of where Google is going to be going. A couple of notes here. It's going to be required to use money to buy computing resources from Google Cloud. The new funding will value San Francisco-based company around $5 billion. This is on this acquisition. News comes with a little over a week since Microsoft announced its reported $10 billion investment in OpenAI, which is ChatGPT. Signals an increasingly big competitive tech race in the generative AI space. Again, good for Silicon Valley, I think, in general, and I think it's going to be good for kind of the next generation. Big tech earnings, though, are showing digital ads market is still not out of the woods. Remember, Elon just put out a very interesting thing around Super Bowl. I didn't bring the tweet up. I probably should have had it in here. But the point is, they're not a public company. But the point is, on digital ads, he's doing like a match. You spend $250, I'll match you $250 for Super Bowl ads, $250K. So you get a $500,000 ad spend for Super Bowl now on Twitter. And I think those are the kind of scenarios that are playing into the space of what digital ads are going to do. And of course, you see fourth quarter results right here from Alphabet, Meta, Snap showed they were not yet in the clear. And I think digital ads are going to be tough. It's going to be a hard advertising environment because there's so much going toward paid to get away from advertising. Things like Substack, what we're seeing in terms of growth there. Also the walled gardens that we're seeing on almost every platform out there in terms of news. Big, interesting. U.S. stocks fall after pretty much a big January, but the January jobs report now could put us in a position here. And what I'm saying is the jobs report revealed a very simple move here, and that is a couple of things. They added 517,000 jobs in January, which trounced the expectations of just 188,000. This is the big issue. So, and then again, unemployment fell to 3.4. So it's continuing to go down. So there's nobody unemployed, and they're adding more jobs, which is going to put more pressure on the job market, which gets back to the whole scenario that we talk about with the Fed a lot, which is price stability. Because if you don't get price stability in order, price acceleration is going to continue. And that usually happens when people have jobs, lots of money. That's when we start to see inflation coiling in. This is a concern for possibly the layout. I felt like maybe the Fed had some information. Now, granted, it didn't grow as fast as it has been growing in terms of the jobs, but the fact that it's still adding 517,000 jobs in January, this may be a scenario where February could be a little bit rocky for assets in general. It's why you're seeing the market kind of in the condition right here. 20K Bitcoin may return, says an analyst, mainly because of the U.S. unemployment hits its 54-year low. I mean, listen, guys, we haven't had this kind of unemployment in any modern era. So, I mean, the Biden administration is just loving this. They're just saying, look at what we've done. Yeah, look at what we've done over here. This is crazy. So, pair reacted, this according to talking Bitcoin, reacted a little bit negatively. We saw a little bit of downturn on Bitcoin, though it is somewhat holding, which to me is very impressive of where Bitcoin is doing. But I think there's an opportunity here that we may get a chance at seeing a little bit more potential entries on Bitcoin and other assets in general. Michael Saylor says he still sees Bitcoin as a safe haven for investors. And then, of course, this is right after MicroStrategy shed $1.3 billion in value last year. Man, I would hate to be in those board meetings. $1.3 billion in value gone. Poof, off the books. Here was Tim Warren. He's been on our show before. He says U.S. unemployment falls to 3.4. If you're wondering what this means, yeah, it's a confusing data point. In the past couple of months, this would have been bearish. I think it is bearish. Even though what we saw from it is bearish. And even though what we saw from Chair Powell this week was a little bit soft dovish, maybe there's a scenario winding up here for the summer that maybe there's data that the Fed is getting, their hands on that is lying or coming into us, or maybe they're just simply lying about what's happening on the inflation numbers. I don't know, but this is starting to look a little weird when it comes to analyzing the markets as to whether or not this can really accelerate Bitcoin into its next level, or we see a retracement. I feel at this point we're going to see a retracement. A couple of things here on the charts. Let me just jump over to the CPI group, get in there real quick. Bitcoin right here, we're on the 4. For you guys, let me stretch this out a little bit just so you can kind of see some of the daily movement that we've seen here on the chart. Love to get your feedback too, because it has retraced back down to 23.3 off of this little bump high right here around 23.9, which was during a little right before on Sunday, which we saw that move, and then right here was the Fed section this week. So a little bit off that. Again, trending what might be down. If I go over to our Bitcoin, you'll notice here. So we had that move up. This was still moving up. This all happened through the first, and then we started to see that soft. And we're holding right now on amplification, but both Bitcoin top line sentiment and amplification sentiment are still flying above the overall market. That's a good thing for Bitcoin. It tells me that we could be in sideways action, maybe slightly down based on the current trend. We'll see how that plays out for Bitcoin over the weekend for sure. By the way, guys, if you are not over on our Diamond Circle, jump over here to our Substack, which is just PBN3 Substack. You'll get in here. This is where we drop a lot of our new Diamond Circle content, including a lot of audio notes, all that kind of stuff. Very easy to do. Let's go over to the poll for today. What do we have? All right. How long will this rally last? Days, weeks, months? It's over. Huh. Interesting. So a lot of people still in the zone of uptrend. I think it's going to be this weekend and early next week, to me, will be the tell on where the market is going and how that might respond. Because I think there's scenarios out here. If you look at ETH, it's kind of been sideways a little bit, but slightly up. I mean, if you think about the trend, but our sentiment is pushing ETH down. So we could see an adjustment here on Ethereum. If you look at Solana, started to adjust downward here. Obviously, here's Avalanche. Even though it had that big run we saw, but again, right here on the last couple of days since Thursday, starting to adjust downward. The other one that was moving, Matic, same kind of scenario from its high, even though it's right there on top of it at 122. Could be some sideways action. We'll be running sentiment on various things throughout the weekend, dropping those over in the Diamond Circle, getting all that stuff to you. Let me get to a couple of questions here and just comments. I mean, Jeff's coming in saying, give me another black swan. I don't know that we have one, Jeff, because the serial scenario that we had with previous black swans, FTX, Voyager, I don't know that they were swans, maybe black ducks, but FTX definitely a swan. That'll be the question mark, is what would be bigger? Obviously, it would have to be one of the bigger exchanges, which many people anticipate there's still an exchange that could be in trouble in terms of liquidity. I feel like the liquidity is out of the market. And now coming back in, according to Dr. Bear, when Jeff and I had that conversation, we're probably going to bring Jeff in next week to talk about this, because he was dead on about where Bitcoin was heading to 25. The question is how does it respond off these job numbers and off the FOMC? Market will be sideways till February 14th, says Saz. Well, I mean, our sentiment data kind of points at that right now, Saz, so I'm in agreement with you. Tough to know. Been selling as things go up. Good for you. You're taking profits, Nick. That's the way to go. And then jobs report isn't accurate. There are still companies massively laying off. Well, Omar, this is a good point that you bring up, but it is, you have to credit the job labor that we're dealing with has been coming from the service industry, and that is the area that has had millions and millions of jobs that were lost during COVID. And it completely is now just playing catch up. Now, how long can it play catch up is the question. I think the big question is whether or not inflation starts to put enough pressure on American families to not eat out or travel as much. When that pulls back, jobs will start slowing, because right now those hospitality jobs are supporting the entire jobs report. Crypto Future says, my second question is do Ethereum after Shanghai upgrade, can it dip to 800? And if it does, then can ETH bounce back to 2,800 before July? I think ETH is on its way up. It's just a question mark of whether or not we get a quick retracement. That's the big question here. All right, guys, make sure if you're listening and over on the podcast, tune over here to this YouTube channel, because this is where you're going to catch the charts, a lot of our deep dives, some of our other stuff that we do here on the channel. It's the only place to catch all this. If you're not in the Diamond Circle, get in now. It's free. Very easy to do. Just click the links down below. If you guys want to reach me, it is out there on Twitter, @Paul Barrett. We'll catch you next time right here on TechPath.